Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo to take a look at some stocks that are trading at or near their 52-week high. So this isn't the all-time highs, but at or near 52-week high, and that have one of the top Zacks rank, either a number one, a strong buy, a number two, which are the buys, or I did include the number threes, which are the holds, because the vast majority of stocks are number threes, and we've seen a lot of movement in the Zacks rank given the earnings reports that have come out. So threes are fine, and I wanted a wide net on this screen. Now, I also looked, obviously, again, for stocks near their 52-week high, and you can do that by percentages, and I originally put in like 90%, and it was hundreds of stocks, and I was surprised. So then I narrowed it down to 95%. So just stocks within 5% of their 52-week high, because sometimes companies hit that, the stock hits it, pulls back a little bit, and we have seen a little bit of a pullback in recent weeks. But then I got hundreds more stocks. So then I simply narrowed it down to 99% and above. So that includes the 100%, those stocks right at their 52-week high, as well as just below it. And I still got, let me look at the number, 223 matches with the rank and just being near the 52-week high. Now, what was in this screen, that's the interesting part, because again, it doesn't have the number fours, which are the sells, or the number fives, the strong sells, because obviously we don't want those right now. But because it's missing that, we actually didn't get that many tech stocks in this screen. You might think we would, since we're basically asking for stocks at those 52-week high. But also remember where we were a year ago, especially on the technology side. You know, this year, we had the sell-off to start the year into Liberation Day. A lot of stocks have rallied off of it. But if you actually go back just the 1 year now, which is August of 2024, you're not seeing quite as much bullishness. You might not even be seeing a lot of those big tech stocks back to their August highs yet. So it's kind of hit or miss. We have breakouts with companies like Palantir, who are at all-time highs, but a lot of the other names, the other big tech names, aren't quite back and have been kind of, they sold off again on Liberation, but they've been kind of in a narrow trading range in 2024, now here in 2025 as they've gotten back. But we aren't seeing, huge breakouts with many of these stocks, and maybe valuation is at play there. And then I also think about stocks that were hitting new highs in 2024 that have not yet recaptured it, like Costco. Costco is just kind of hanging out there, but it's not at the 99 or 100% anymore, but probably is over 90 though. Because it hasn't broken down, but it's still not able to push forward versus a year ago. So keep that in mind. It's a little different looking for 52-week highs versus all-time highs, but you can find some hidden gems using a screen like this, which is why I decided to run it this week, because I've been noticing a few names that have been breaking out that nobody's really talking about. I'm going to include one of them today. So what is in this if it's not technology? So we had a lot of leisure stocks, travel and leisure. Those have been doing well and holding up. The consumer's not pulling back on the cruises. So Carnival Cruise Lines, for instance, made this screen. So they're still trading at their 52-week high. And they have the decent Zacks rank of 1, 2, or 3. There's a couple others on the gambling side, like Las Vegas Sands is on here. But again, all the leisure type of stocks are making it. What else? Gold. Gold is at many of those at new 52-week highs. Some are at all-time highs, but you'd be surprised not all are at the all-time highs. So, but that area is very hot with the very good Zacks rank. Banks, I'm going to talk about one of them, but a lot of the smaller banks and the smaller regionals are on this list. Some auto companies. Now, remember, it's just 52-week, so they might have sold off for Liberation Day, had a big rally, and now are back to last year's highs. I'm going to talk about a couple of those. And then construction, anything to do with the data centers, those remain very hot. And I'm going to talk about one of those as well. So there's a lot going on that you might not know going on underneath the scenes of the tech and the AI side of things and, the Palantirs of the world. There's much more than that, but I am going to talk about one of the tech stocks. It's not really getting much love, but it now too is at the 52-week high. So let's dive right in. So I'm going to share my screen. I'm going to discuss what's going on there with those of you who are only listening. And we're going to start off with Archer Daniels Midland. So the way the Zacks screen works, it does give me the results in alphabetical order. So this one is right up at the top and jumped out to me. I used to own it in the value investor portfolio starting when the pandemic hit in 2020, early in 2020. We bought it because everybody needed food. It had sold off. It was cheap. And so we dove in. We did get out a couple of years ago, but these shares really taken a beating. I'm scrolling down to show they were basically back to where we bought it, or even, just about where we would have gotten in the value investor portfolio back in 2020. It's done a round trip and given up everything. Some of this is they had some issues. They've had to look at their accounting again. And so you can just see the earnings down. But this is what this type of screen is designed to show, because you can see Liberation Day lows. Those were the 5-year lows. And now we have had this very nice big rally. That's all you can call it. And again, look where it's at. And then look over a year ago, that's where you're getting that breakout. That's where you're getting it's at the 100%, but nowhere near its all-time highs back here in 22. And so it's got a long way to go with that. So what a screen like this can show us are the most recent ralliers, but it's not, and it's giving us the better rank. We're not getting at 4s and 5s. But remember, the rank is just changes to earnings estimates. So if no one is cutting Archer Daniels Midland right now, even though we do have this earnings decline and what looks like for 26 and 27 expected here, not a lot of gain. You see some gain for 26 off of this low here for 25. So that's good to see, but you're not really seeing much earnings growth there and it's still lagging. So this kind of chart doesn't really give us like the top stocks, but it does indicate that the sell-off was overdone and we are starting to see some earnings growth again. And so some value investors have got in here. But ADM, let's see how cheap it is. I didn't look to see what the PE is looking like because those earnings have come way down. So it's still fairly cheap, trading about 16 times. But look at that PEG ratio at 3.4. So a lot of the rallies probably priced in what's going on with the earnings. And we can see down here, 2025 still expected to decline 15%, but 26, as I could see on the chart, is where we're getting about a 20% rebound. So finally, maybe going to turn it around. Nobody's cutting so far for next year. Only earnings estimates increasing for next year. That's what the Zacks rank is looking at. It does have the number 3 on the Zacks rank right now. So ADM, ticker ADM, is an interesting play. I'm bringing it up just to show you what this type of screen can give you with these basics. And and it's not always what you're hoping for. But let's turn to one that I was really surprised at that is looking pretty good. BorgWarner, ticker BWA. They're in combustion. They do hybrids, EVs. So this is the car side. But I haven't looked at this stock for a while. It's been up, down, up, down. It too, 5-year lows on the Liberation Day. But a serious rally well past the 52-week high. Looks like it's definitely a 2-year high here. We're not at 5-year yet. That was back in 21. But look at these earnings estimates revisions. So we have 25 here. And after this last earnings, we've got this nice increase. So they heard something better here. And then 26, they're already raising there. You can see it jumping. And then even in 27, starting to get those in, and you can see the sharp increase there. So whatever they said on the conference call must have been pretty good. Scrolling down, earnings expected to be up just 4.4% this year, but 7.1 next year. Forward PE of just 9.6. It's cheap with a PEG of 1.3. So that's pretty low, not quite at the value of growth and value combination, which is 1 and under, but very attractive here. So not surprising. This is why we've got this big rally. So this is this type of chart I was hoping for when I did this screen, and we are seeing something good with the earnings. It's still a number 3, just like ADM was, but look at these A's across the board on the style scores: A for value, A for growth, A for momentum, A VGM. But I wasn't expecting this on the auto side right here, trading at the 52-week and basically 2-year highs and still cheap. That's BorgWarner, a hidden secret gem out there. Ticker B as in boy, WA. And then let's switch over to one of the banks. I did choose one of the big ones because I don't think anyone's really talking about this one. Bank of America, BAC, owned in Berkshire Hathaway. JP Morgan has had a huge run and is breaking out. But let's look at Bank of America. I haven't looked at this one in a while. And it is not just a 52-week now, but it looks like it's at the 5-year, which might be, new record highs. Not surprising. Again, JP Morgan is at those levels, but look at these earnings. This is what you want to see on the earnings side. I'm scrolling down. So they did see earnings contraction last year, 4.1, but growth of 12.2 this year and 16% for 26. And then we have 27 on here, and that looks even more bullish. So double-digit earnings growth. The shares trading at 13 times, but you can't really use PE for banks. You should use price to book. Let's see. It's at 1.33, and bank analysts say buy at 1, sell at 2. 2 is like complete valuation for a bank. Anything over 2 is too pricey. So this is pretty cheap. I'm liking anything under 1.5 here. I feel like we're still would be getting in at a very attractive level. So Bank of America, also Zacks number 3, it's got D's across the board there on value, growth, momentum, and VGM score, but it's got the better Zacks rank. And so I'm going with it. We didn't screen for style scores, and it's still pretty cheap. I'm not sure why it's got the D for value there, but I would have given it at least, maybe a B or a C just based on that price to book ratio. So yes, there were banks in here. What else? Another one you would be familiar with that was on the list is Alphabet. I own it in my own personal portfolio. I know many of you do too. Finally getting a breakout here. So taking a look at this chart, it is the 1 year. So it's at 100%, but you can see it's now breaking out to all-time highs again. And look at these earnings. Very solid up and to the right with a nice spread, although next year up to 26, not quite as vigorous as what it's been in the past. Let's see what that actually means. So last year, kind of crazy, 38.6% earnings growth. This year, 24.4. This is a mega cap and it's still doing 24.4. But you can see, like I just noticed in the chart, it's a little more narrow there. So we are seeing earnings growth, but just 6% so far expected for next year. So analysts pretty conservative there. And that could be because of the spending levels, CapEx really increasing. But then maybe that pays off because 27, it looks like it's back to the double digits again in 27. But this is just what's going on now. Estimates can be cut. They can be raised. We won't know. 27 is way far into the future for right now. But still, this is the kind of chart you do want to see. So is this a hidden gem? I don't know if it's hidden. It might be a gem. It's trading at 21 times on the PE, PEG ratio of just 1.4. So that's very low. I just want to kind of see where we are on the other ratios. Price to book, 6.95. Price to sales, 6.79. Under 10 is on the more attractive side on the price to sales for technology stocks. And they have been under 10 for a number of years now. So that has stayed very attractive. So it's not cheap. It's not a value here, but I am liking this attractive PEG ratio, which gets you some value and growth. And so, yeah, I would label this as a gem, but not hidden. It's got the Zacks number 3, style scores, C for value, C for growth, D for momentum, and a C overall. So just kind of mainstream for Alphabet right now on the rank at the 3 and the style scores, but looking pretty good on that chart. So we'll keep an eye on Alphabet, GOOGL. And now returning to true hidden gems, one I was noticing yesterday. It's at new all-time highs, but definitely 52-week United Rentals, URI. This is the big equipment maker. I know many of you are like, it's boring. You know, what do you do with it? It had the huge sell-off on Liberation Day, now huge rally, but it has overtaken those 24 highs. Did have a miss here, and it's had a couple misses in the last 4 quarters. But a lot going on, just 0.66 last quarter. So it's done a lot of acquisitions over the years, maybe a little hard for the analysts to get a grip in recent quarters on what is happening with those earnings. But look at the earnings. So we have had estimate cuts and we have seen it come down. This year, 2025, not about the same as 2024, but return to growth in 26 and then also in 27. And what's that looking at down here? Yep, pretty much confirms what the chart says. So 24, 6% after several very hot years of double digits. But very difficult to keep doing it like at that level. And so it has slowed. 2025, just 1.7. Like I said, it looked pretty flat compared to what we saw in 2024. And then 9% returning to the growth side in 26, trading at 21.4 with the PEG ratio of 2.2. Not cheap. A lot of analysts give it, fairly valued here. It was probably a nice place to buy on the Liberation Day sell-off, but now it has regained all of those losses and then some, and is looking pretty fairly valued unless these earnings break out some more. But still a hidden gem, equipment, leasing, and when we've got huge data centers selling, you're going to need equipment, or building. You need equipment to build all that kind of stuff. So United Rentals, U-R as in Robert, I-U-R-I. Another one I want to look at. Let's see, how many have I done? 1, 2, 3, 4, 5. I've done 5. I'm going to do an extra bonus because I saw a couple that came up with the word electric in it. One was, let's look at the first one. One was Hawaiian Electric Industries. I was not familiar with this company, but I like electric in the name. So I thought I'd take a look. HEI. HE is the ticker. H is in Harry, E is in Edward. It's a number 3, B for value, F for growth, D for momentum. But when I scroll down, and I did this exact same thing I'm doing right here on this podcast. I scrolled, I looked at this chart, and I was like, whoa. So it is trading at the 52-week high, but you can see it's basically gone nowhere in that time period. This is what I was talking about, that last year, a lot has happened in between August of 24 and here. And it doesn't mean it's breaking out. It doesn't mean it looks like Alphabet's chart. It can look like Hawaiian Electric. And so already I was just not interested in this stock, but this is, why we're doing the screen, to find the hidden gems on these types of screens that are breaking out. And this one, earnings just looking really flat. Are they going up at all? Well, 24 they did, up 263%, but then this year down 6.1. It does show a rebound of 13% for next year, but you're not really seeing that much on the chart. I guess you are, because down here is 25, and then there's the 26, and the stock is trading around $10. So earnings going up from, 92 to 104 will get you, 13% there. So, but that's why we do these screens. So not a super interesting one, but the other one I looked at was Lincoln Electric. This is in like welding and manufacturing, actually. And you can see here, industry, manufacturing tools and related products. It's in the bottom 9%. So I was like, when you see manufacturing right now, when it's in a recession, I'm like, how could this be showing up at 52-week highs? Was it like we've seen with a couple of others where it has had, the 5-year sell-off like ADM? And, it's now bounced off that. So, but things still aren't that good on the earnings side, or even still declining. But it's a number 2, so I'm liking that. D for value, C for growth, D for momentum. So we have an overall D score again. But look at the interesting things going on with the earnings and the chart. So we are definitely at the 5-year high. We're trying to make a run for what looks like the all-time high here, which was hit in early 2024. So that's why we're at 52-week. We've easily surpassed last August. And so we're looking for the all-time high here. But look what's happening with earnings. 25 has come way down, but now analysts getting more bullish suddenly. We see a spike up in recent weeks in those estimates. So someone was raising there. Then also similar on 26. And then also similar on 27. This looks like BorgWarner's, where suddenly someone is raising. So 24, the earnings declined 1.3, and then 25, they have come down, but now are spiking up a bit, expected to be up 2.5, and then 8.6 in 26. We don't quite have 27 on here, but based on the chart, it's going to be up again, and up a nice number there. So what's going on at Lincoln Electric? I don't know. I'd have to go in and see, because this is just the charts and the earnings estimates. It's not cheap, trading at 25 times, PEG of 1.7. That's not too terrible on the PEG side. So again, everybody is piling in here on the manufacturing and tools side, a lot with welding. But that could be because, again, we have a lot going on with construction. It's not just United Rentals. Tutor Perini also on this list, ticker TPC. So I saw several other, like on the construction side, and even something that is in like this manufacturing category might be getting a play with what's going on in the data center side. So this is a great screen to do. I recommend people go on Zacks.com. It's just, let me show you where it is. I can do that right now. If you're watching on YouTube, go to screening up at the top, stock screener. Then all I did was look at price and price changes over here on the left side under select a category. So price and price changes, I clicked on that, and then you see 52-week high, you see 52-week low as possibilities, but I like this feature, price as a percentage of 52-week high low range. And I know you're thinking, what? I don't know what that means. What am I supposed to look for? That's why this little I next to it is important. You can click on that and it'll tell us. So what this means is the current price as a percent of the 52-week high-low range is an indicator of the stock's position within its 52-week trading range. I'm just reading what it says here. A value of 0 indicates that the stock is trading at its 52-week low. A value of 100 indicates it's trading at its 52-week high. So when I said earlier that I started with 90, so that was within 10% of its highs. And then I just narrowed it down and then ended up doing 99. So I want greater or equal to, and that's what these little arrows are. Then just put 99 in, click add. Let's just do it. Or 100 if you want it exactly on, and then it will show. Now this is showing me matches 464. And we had 223, but then I went in and added the Zacks ranks of 1, 2s, and 3s. And that's how I got the 2, 2, 3. So this is a very basic screen. And I do like using it to find these hidden gems. Everything isn't Palantir out there right now. Although Palantir, the best performing stock in the S&P 500 year to date. And then number 2, was in the screen, and it's Newmont, ticker NEM, one of the gold miners. It's number 2 in the S&P 500 year to date, and that did show up in this screen as well, along with various other gold miners, including Barrick, which is ticker B, Newmont, ticker NEM, and then a handful of others. But we know that because gold miners are hot and have the good rank trading at 52-week highs. So I'm going to go through all the stock tickers we talked about. There were a lot here. Run these screens. Check out what might be hot out there and why. Look at what industries these companies are in. It gives you some clues as to what's going on out there, because it's not all just tech or, social media or, AI per se on the tech side, but it could be AI on the construction side is where we're really seeing it. So ADM showed up, but the chart wasn't as good as I would like. Those earnings are still declining, but it is at the 52-week high. So some value investors have gone into that one. Ticker ADM, A as in Adam, D as in David, M as in Mary. Then we had BorgWarner on the auto side, ticker B as in boy, W, A as in Adam. And that chart looking very good with those earnings estimates on the rise. Then we had some banks, including Bank of America, busting out, it appears, new all-time highs. Ticker B as in boy, A as in Adam, C, BAC. Then we had Alphabet, ticker GOOGL. United Rentals on the equipment side, URI, there is the ticker. Lincoln Electric on the electric side, but not really the electric side. Manufacturing, welding, L as in Larry, E as in Edward, C as in Charles, O, LECO, LECO. We had Hawaiian Electric too, but I wasn't liking that chart, but I'll give you the ticker anyways. H as in Harry, E as in Edward. I talked about how some of the travel stocks were on here. Carnival, C as in Charles, C as in Charles, L as in Larry. Then we also had Las Vegas Sands, L as in Larry, V as in Victor, S as in Sam, LVS. We had Newmont, N as in Nancy, E as in Edward, M as in Mary. We had Barrick. They were in there, just B as in boy, or Barrick, B as in Barrick, for Barrick. And what else does that cover? Everything. Yeah, that basically covers all the ones I mentioned. Oh, Tutor Perini, can't leave them out on construction side. Finally, also breaking out. Let's just take a look at it, right? We want to see what some of these construction and AI data center stocks are looking like. Tutor Perini, T as in Tom, P as in Paul, C, it is a Zacks number one rank. We did not see that many number ones on this screen. There were some, but not that many. Most of these other ones I've talked about were a 2 or a 3. This is the first number one. B for value, A for growth, B for momentum, A overall. And then you can really see the breakout here. This chart looks like Palantir, right? But it's not. It's not Palantir. Look at the earnings all over the place, but finally turning around here. And we're seeing 25 up and to the right, 26 up and to the right. Don't see a 27 on this chart yet. So maybe not getting that from the analysts. And down here, I'm not sure this is right. Let me look. Let me look at the back of the chart. Well, maybe that it's showing flat on the earnings growth, but I don't think that's right for 25 here. There's just no bar there, but 26 is showing 46% earnings growth. I'm going to look at, the detailed earnings to get a little bit better number on for this year, because I don't think that's right. No, see, it gets a little messed up. So they lost $3.13 last year, expected to make $2.72. That's definitely earnings growth, 186.9%. Sometimes when you see a negative the prior year, the system gets a little messed up on that chart. That was on the quote page. So that's why it wasn't showing the 186, but it should. I'm going to talk to someone, get that fixed. But then we're getting, 45, 46% for next year as it showed on the chart. And we do have the analysts raising. Nobody's cutting. Not a lot of coverage on Tutor Perini, just 2 estimates. One is higher in the last 30 days. That's how we get that number one. Look at this sales growth, 20% this year, 16% next year. Is it cheap? 21 times. That's not super stretched, but you can really see it in the chart. Look at the 3-month here, up a big rally off of those earnings. Tutor Perini for real, apparently, on this turnaround in its earnings. Building products, heavy construction is their industry, and it is the top 1% of the industries. So top 1%, wow. I haven't seen one of those in a while either. Number one out of 245 industries. Building products, heavy construction, not technology. So call it what you want. But a lot of interesting revelations in today's podcast. And that's why you want to subscribe. Be sure to get us somewhere. We are on YouTube. Get us here so you can see all these charts and see what I'm talking about. Get us at Zacks.com/YouTube, or just put in Zacks Investment Research into the toolbar and then subscribe. And you won't have to think about it. You'll just be notified when these drop. So do it there. Also get us on Apple. You'll be notified there when our audio podcast comes on. Get us on Spotify. Get us on Amazon Music. Get us on SoundCloud. We're on just about every platform these days. Get us somewhere, and I'll be back next week with some more stocks.